Good morning, all. I hope you are well, and welcome to another one of my videos. So, I have the same pairs on watch today. Those are Euro CAD and Euro Dollar, and for very good reason. So, I'm going to break them down for you now, give you my thought process as it comes to me. Many of the things that I do, I was thinking about this last night. Many of the things that I see, I just naturally see just because of I've been doing this for a little while now. So I don't always mention all of them because some of them just come to me automatically because they're kind of ingrained in my subconscious. But I will try and uh, relay to you as many of them as I can in these videos, bearing in mind that we have a 20-minute time limit on these videos. So with that in mind, let's break them down for you now. So EuroCAD on the higher time frames. I was looking at this, as I said in yesterday's video. If you were watching that one, we had the sharp move down and the sharp move up, giving me a clue that there was a lot of liquidity in this area to send price to the upside. Okay, so if we move down sharply and we move up sharply, that means that a lot of orders were placed in this area very quickly, and then they were filled. And then, of course, we have stop losses, etc. Maybe not dating back to 2015, but regardless, this becomes a high area of value versus if price, just got to this area very and reacted from this area very slowly. So sharp move down, sharp move up, and then eventually we find our way all the way back down to here. And as I've said in previous videos, and this will be relevant when I drop down to the lower time frames, usually these higher time frame liquidity points, so the daily, the weekly, the monthly liquidity points, the ones that we can see clearly on those time frames, normally we break below them before rallying to the upside, or break above them before selling off to the downside. Okay, and you can see that here we break below and we push up with the same or a similar level aggression, with a similar level of aggression to what happened here when we rallied last time around. We rallied with a lot of aggression. We did the same thing this time around as well. Okay, confirming the idea that there was a lot of liquidity here. We then, if I just drill down, we then see that we had those series of impulses and corrections, which is what we typically see: impulse, correction, impulse, correction. Then we get the commitment, more commitment as the confidence comes in. Impulse, correction, continuation, correction, continuation, and then we form a larger correction, which just so happens to be about halfway within the range. So within the range, I mean from here to here. Okay, that's why I've got my target here. And typically speaking, we have a larger correction like this about halfway within a range. So this makes sense as well. As I said yesterday, if we just measure the impulse, the correction, the continuation leg out of an impulse correction continuation often tends to be of a similar length to the preceding impulse. So this one here, if we take the measurement from here to the top of this correction, and that would send us up to here, which, as I said yesterday, makes sense because we have what we call a near miss. So when price gets close to an area of value such as this, which is why I've got a ray line there, and it doesn't quite make it, it often sells off and then finds its way back up to there to do whatever it's going to do, be that sell off from here or form a correction to go higher. Okay, so that ties in as well. We then have, talking about near misses, we have an area of liquidity here. Price pushes up, pushes down, and then we have another near miss as well. Okay, and I said these often get filled before a move to the upside can occur, or to the downside on the flip side. Okay, and the clue for me that we were going to come back down was the fact that we moved up very correctively, giving me a clue that people were trying to buy this, while simultaneously there was orders being placed down here and orders still in this area that were dragging price down. So you get that kind of corrective move up. And then we get a bit of commitment, but then the sharp move down confirms that theory that there are a lot of orders here and a lot of orders that are being placed here, which is why price is being dragged back down. We then do tap into that area, okay, and we do so by way of a textbook, maybe not a textbook. We do so by way of a reversal structure. We have the 1, 2, 3, the three drives. The first drive, failed drive, second drive, failed drive, and then we tap into it and now we're getting the commitment. If you watch yesterday's video, we were hovering along here, and I was anticipating, while many people were likely anticipating that we were dropping out, I was anticipating this, which is exactly what we've happened. If you look at the daily chart now, we've had a daily retrace, so we've had a green candle which retraced at least 50% of the body of the previous candle. That is a very strong indication, although not 100% confirmation. Nothing is 100% confirmed in trading that we are potentially about to rally to the upside, because we have broken below a higher time frame liquidity point before potentially that move to the upside, which is what I said occurs the majority of the time. Okay, nothing happens all of the time, nothing happens none of the time, but that is what those of us who trade the Falcon strategy see more often than not. Price breaks below. People believe that this is now resistance because support has been broken. Okay, if we just drop down and look at this reversal structure, you can see that potentially, price came up to here, it came back up to here. Some people may have seen, we don't know exactly how people are trading, but some people may have seen this as a retest to go short. So people start getting short, and then it breaks above. So we see this the majority of the times. In the majority of cases, support does not become resistance once it's broken above. Yes, we do see retests, but it's not normally the case that it just suddenly turns into resistance just because price is broken below. And the clue, this is something I haven't touched on for a little while, is we analyze the nature of price. Okay, so nature theory is something taught within the Falcon community, and the nature of price is how price got to a particular area. And look at how price got to this trend line. It got there correctively. Yes, we had a bit of impulsive momentum here, but at the trend line we have a very corrective move down. So when we correctively move down, the natural next move after a corrective move down is an impulsive move up, which is exactly what we got, which is why nature theory is so powerful. So, with all this being said, and the fact that we now have a completed piece of structure, and by completed piece of structure, I mean a 1, 2, 3, which also has an internal 1, 2, 3. So 3 drives there as well. First drive, push down. Second drive, failed drive, push down. And then a third drive. What I'll be looking for today is the following. So I'm just analyzing what price is what price is doing, and this is the forecast that I did last night. Of course, once your entry is close to shaping up, you don't often have to do a lot of forecasting, but this is starting to me to look like a bit of an expanding pattern. So by expanding pattern, what I mean is we've had the impulsive push up, we had the move down, and then price left a footprint. Okay, this is what we call a footprint. We had the sharp move down, sharp move up. Okay, so, and we've since moved up correctively. Nature theory, once again, how did we move up from this area correctively? What does that mean? We're likely to get a move back down. Okay, and we also have, if you just look at this, we also have first drive, second drive, third drive. So this is potentially a completed piece of structure within itself. Okay, and what we tend to see in these instances, I wouldn't be surprised if price does something like this. So previously I was looking for the impulse up followed by the correction, and then I'd be looking to get long on the break of this flag or within it, right? But because of how we're sloping up now, and given that this is a daily forecast, what I think is likely, if I'm just going to move this forecast to the side based on how price has moved up, what I think is likely at this moment in time is that we may get something like this. Okay, so we may move down to there. That will be at the start of the London session. But we might get a little bit of momentum. We then get this. Then we tap into that low. Okay, and bear in mind that this is not necessarily a scale. But when we would have that 1, 2, the near miss to here, the move up. Then this structure would have a bit of depth to it, which is what we often look for. We need to see a little bit of depth. Okay, and then we would have the third touch, which comes down to here, and then we would have the 1, 2, 3, which taps into that sharp hook point. What do we know? If it's a sharp move down followed by a sharp move up, that's likely where the liquidity is. And then I could still potentially get this reduced risk entry on the break at that point. but then we would have this, completed structure. And if price tapped into there, I would take the risk entry. And if, depending on what the risk to reward was, depending on how wide the stop loss was, I would potentially look to get long on the break of a flag such as this. But this just needs looks like it needs a little bit more development at this moment in time. But I've got my alert set, and I will be seeing how this shapes up. But that's what I'm going to be looking for, folks. We shall see. Sometimes you just get an instinct for these things when you've been doing them for long enough. You could see it. I've just flipped the chart upside down. So we have the 1, 2, 3 there. Yeah, I wouldn't be surprised if we get that because of that intentional footprint that price has left. If we get something like that, that wouldn't surprise me. And then that would be proportionate if we just measure the impulse down. Okay, and take it to the bottom there. That would be a 30% or just over 35% retrace of the preceding impulse, which is a healthy pullback for a move to the upside to continue. Okay, so that's what I'm going to be looking for today, folks. Let's see what price does. Okay, so it's a similar story with euro dollar. So if we just look at euro dollar, so on the higher time frames on the weekly chart, we tapped into the last exchange of liquidity. So there's no other exchanges of liquidity that I can see to the left. It doesn't go back any further. I don't know whether that's because I've got limited data or whether that's just as far as it goes. But regardless, the last exchange of liquidity that I can see on my screen is here. There was an exchange of liquidity, and price pushed up very aggressively from that area, giving me a clue that potentially if we tap into this area again, we will move up with the same level of aggression, and this would be a good area for people who caught this move to the downside to be getting out of their positions. What do we know? Higher time frame liquidity areas, liquidity points, we tend to break below them before rallying to the upside, and we did. That's exactly what happened, and we moved up with a similar level of aggression. Now, in this area here, just to touch on it, we were looking for a reversal structure down to here. So we were looking for trades to the downside because we tapped into this exchange of liquidity by way of this 1, 2, 3 touch structure. First drive, second failed drive, third drive. And what do we know? We usually break above them on the higher time frames before we push to the downside. And that's exactly what happened. Okay. And well, what do we have now? We have an exchange of liquidity here. We come back down. We near miss it. Okay, price gets close to it but doesn't quite tag it. So it's usually the case that we come back down, break the low before potentially rallying to the upside. What do we have? We break the low again, and I said yesterday that this was an area of significance because it was the start of a piece of structure. So we had the 1, 2, 3, and then price rallied to the upside. So this is more significant than if it's just a random low, because it actually has context to it. It was the start of this piece of structure which caused this move to the upside. So it wouldn't surprise me if we tap into this area again if we move up with this kind of level of aggression that we saw here. And you can see we may be starting to get that. So if I just unhide that again. So again, many people would have seen it break below here. They would have been anticipating it going short. But nature theory, once again, how did we reach this area of value? We reached it structurally by way of a 1, 2, 3 touch structure. So if we reach an area structurally, and given that structure in itself is a correction, then it's likely that we will break below, catch people the wrong side, and then catch people the wrong side of the market, and then rally to the upside. And you can see that's exactly what happened by way of this daily retrace, which retraces even more of the previous daily candle than with EuroCAD. So we have a daily retrace there. That's the confirmation that we look for. Of course, as I said, nothing is 100% confirmed, but that's about as good as we can actually look for as confirmation. So we had this sharp move down, which I believe was just a bit of news. So that's why we don't trade the news, just to touch on it, okay? Because typically speaking, all news does is cause whipsaw. It doesn't change the direction of the market. So we get this sharp move down, sharp move up. But I'm not worried about this because it is too far away from what price is doing now to be a factor. So, if we get a flag here, this is so far away that is not relevant. It's not relevant to this structure because of how far in percentage terms. If we just measure this correction here uh, from the base there, that is, it's too far away. If it's more than the range or more than 50% of this range away, then I'm not concerned about this being relevant to where price is now. But we had the news cause a bit of volatility. We say that news causes volatility, not direction, and you see evidence of that here. The news caused a sharp move down, and then we just pushed back into the same direction that we were headed anyway. Okay, so with all that in mind, and just unhiding the forecast, what I'll be looking for today is the same thing as with EuroCAD. We look like, you can even see, this is what I was going to touch on. I thought this was with EuroCAD, but you can see it in Eurodollar. We have a first drive, second drive, third drive. So potentially there's a little internal structure within what I'm looking for today. But I'm just kind of micro analyzing it just to try and make sense of what price is doing internally. But what I'll be looking for is the same thing. Is if we push down to there, we would likely have something like this now, just looking at how structures formed, and then we would have that 1, 2, 3 tapping into this sharp hook point, sharp move up, sharp move down, move up, and that's potentially where the liquidity is sat. Of course, if price does something else, we shall see what it does, but I'm going to set an alert just to see if we push down to this area, because I didn't do that. And I've set another alert up there just to see if we impulse out of this, because we may just rally to the upside. Okay, it may just blast to the upside, and if it does, then I will make a judgment call based on nature theory again, how price moves up, as to what I will do. Because if we start moving up like this, it may be a bit of a running channel, or the fact that we've moved up correctively may suggest that we're getting a bigger flag. Okay, but the bigger these flags get, the less likely these are to commit to the upside, because typically in the sequence we see the smaller flags if we're going to push higher rather than larger flags. So if we start moving, up correctively, and we get something more like this, then that could indicate that this is some kind of structure like that to push to the downside. If I just put the forecast back in its box. So the bigger these corrections early in the run in one particular direction or another get, the more likely they are to actually not be what they think they are, what we think they are, and then we potentially have this 1, 2, 3, which taps above here for a potential move to the downside. Okay, so this is why it's important to stay neutral. When you see people on TradingView and on YouTube saying things like price will do this, price will do that, honestly, it's absolute nonsense, because nobody knows what the market's going to do. And so long as you're open-minded enough to accept that you don't know what the market's going to do, then you are open to, things which don't conform to your bias, and you don't blindside yourself to red flags which are there to keep you out of the market. If many experienced people say things like price will do this, will do that, but then they just completely blindside themselves. That's called confirmation bias. It's talked about in trading in the zone. You see it a lot in politics. I've seen people post things. I don't get involved in politics anymore, but when I did, I used to see people post things about politics which I knew were factually and statistically inaccurate, right? Regardless of their political persuasion. So I would provide them with the data which disproves their theory, and rather than say, oh, that's interesting, I didn't realize that, they just block you. So they just block you on social media, because when you have confirmation bias, you can't see, and you don't want to see or hear anything which doesn't confirm with that bias. So your response is usually to do something like block someone, or just tell people that they don't know what they're doing, which is what I get a lot of the time. I don't care if people think I don't know what I'm doing, because I'm just doing and looking for things which have repeated themselves for decades and decades and decades. And if you want to go down the rabbit hole of Elliott wave theory, which this is loosely based on, that has proved repetitive and statistically reliable for over 160 years. So, and these are just psychological patterns that we look for. So anyway, I've digressed a little bit, but hopefully this has provided you with some value. Have a great weekend, folks. I will be back next week with more videos. But for now, have a great day, and I'll speak to you again soon. Thanks for watching.